Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Tuesday, September 6th. Stocks on Wall Street are picking up right where they left off before the three-day Labor Day weekend, with heavy losses. The sell-off was prompted by Friday's employment report, which showed zero job creation in August. The negative sentiment spread to the Asian and European markets yesterday, and now it's likely to result in another day of declines for U.S. stocks. The weak jobs report, combined with the continuing sovereign debt crisis in Europe and a sluggish outlook for global economic growth, is causing extreme uncertainty in the markets. And that's pushing investors to search for relative safety. Despite all the negative news, U.S. Treasuries are just as popular a safe haven as ever. They're rising again today, and the yield on the benchmark 10-year note is dropping to a record low below 2%. Meanwhile, investors still consider gold the ultimate safe haven investment. The precious metal is rising to $1,900 an ounce after hitting a new all-time high above $1,920 earlier.
We're also seeing a lot of action in the currency markets, with the Swiss franc seeing the heaviest selling. The Swiss National Bank stunned the markets by setting a floor under the euro-Swiss franc exchange rate. It also pledged to buy, quote, unlimited quantities of euros to defend the floor. This is an extraordinary step for a central bank to take, but policymakers felt it was necessary due to the massive overvaluation of the currency, which undercut Swiss exports and weighed on equities. The news is pushing the franc down by more than 8% against the euro and the US dollar, but analysts say the Swiss National Bank's toughest test lies ahead, especially if the European sovereign debt crisis continues to spread, since the Swiss franc is still perceived as one of the safest investments in the currency market.
Speaking of the sovereign debt crisis, it continues to be the main focus of European investors. Financial institutions have been saddled with the debt of countries that are on the verge of default, and those concerns are pushing the stocks down sharply today. U.S.-listed shares of Credit Suisse are tumbling 14%, while Royal Bank of Scotland is falling 13%. Fears about contagion from the debt crisis are also spreading to the U.S. financial sector. Right now, Bank of America and Citigroup are dropping 6%. Wells Fargo, JP Morgan Chase, and Goldman Sachs are also sliding. Another big decliner this morning is PulteGroup. The luxury home builder is falling 6% after Goldman Sachs took the stock off its conviction buy list and cut its forecast for the U.S. housing market. Goldman now predicts that demand will be flat through next year. The news is pushing other real estate stocks, such as KB Home and D.R. Horton, sharply lower as well.
We're also keeping an eye on shares of Walgreens today. Same-store sales at the drugstore chain rose a better-than-expected 5.6% in August, helped by non-prescription sales. Meanwhile, shares of Sunoco are gaining about 1%. The energy firm announced that it will exit the refining business and conduct a strategic review of its logistics and retail units. However, most energy stocks are declining along with the overall market, and crude oil prices are dropping below $84 a barrel. Finally, a big private equity firm is going public. Carlyle Group filed its plans for an IPO with the SEC, but it hasn't yet determined how many shares to offer or at what price. Carlyle will join other investment firms that have gone public, including Blackstone Group, Fortress Investment Group, Apollo Global Management, and KKR. That's the latest from Weiss Research. Have a great trading day.